Welcome to Chart Basics Lesson 3. Today we learn volume on the chart, the trust signal that comes right after price. You'll learn 1. What volume is. 2. Why you always read it with price. 3. What a volume surge means. And 4. Why moves without volume are dangerous. See those bars under the Bitcoin daily chart on screen? By the end of this lesson, you'll be able to read what they're saying. Ready? Let's get started together. The bars under the chart are volume. They show the total amount traded during that candle's period. On this chart, 1 day. A tall bar means lots of people bought and sold. A short bar means only a few traded. In plain English, it's the size of interest. Analogy: when coffee jumps from $3 to $4.50, the comment section lights up. Price moves work the same way. The more people care and trade, the taller the bar. Concretely, if 1 million Bitcoin changed hands yesterday and 2 million today, we call that a volume increase. You can see that difference directly in the bar heights on screen. Rule of thumb: a move with many participants equals higher trust, / a move with few traders equals lower trust. Compare the tall and short bars on your screen right now. When price rises and volume is heavier among, that's a rally many people agreed with. It's more likely to continue. When price rises, but volume stays average among, a small group may have pushed it up. Those moves often don't last. The same applies on the downside. A high volume drop means many people sold. Bounce resistance tends to be strong. On this daily chart, track price, candles, and volume bars together. Don't read them separately, always as a set. Key point: first check whether the price move came with volume. When volume suddenly jumps to about twice the usual level or more, pay attention. It's a signal that something important just happened. How to spot it? If a normal volume bar on this screen is about 10 units high, a surge day spikes to 20 or more. Those spikes often line up with news, big institutional inflows or outflows, or a trend turn. The same kind of event that moves the S&P 500 or a hug when the Fed surprises markets. Case 1. Surge at a bottom. After a long decline, volume explodes at the lows of one. It can mean sellers are largely done. Buyers may be next. Case 2. Surge at a top. After a long rally, volume suddenly explodes at the highs and treat it as a caution flag. Profit-taking zone, reversal possible. Key point: a volume surge by itself is not a signal. You need where it appeared, bottom or top, and how price is moving before you can trust it. When price breaks an important boundary, support or resistance, but volume stays at normal levels or among, it's often a fakeout. We call that a breakout without volume. Definition: resistance is pierced to the upside, but volume doesn't come with it equals a small group may have shoved price through temporarily. It often slips back soon. Compare: resistance break plus no volume equals low trust, high reversal risk versus B. Resistance break plus volume surge equals higher trust, more likely to hold. On the chart in front of you, do you see spots where price crossed a boundary while the volume bar stayed ordinary? Find those. That's the fakeout signal. 체크리스트 1. 바운더리 브레이크 비저벨 2. 노 볼륨 그러면 포즈 1. Boundary break 2. Volume circumon, a signal you can take more seriously. Volume is like a thermometer for trend health. If volume keeps growing during an uptrend, the trend is getting stronger. Example: Bitcoin rises 5 days in a row, and volume steps up 5x, 6x, 7x with it. That's a healthy, accelerating rally. But if price keeps rising while volume pages 10x 그러면 8x 그러면 6x. The trend is running out of breath, a sign it may stall soon. Definition: trend and volume in the same direction equals healthy/opposite directions equals warning. Example: rising price with falling volume equals more people ready to sell equals reversal risk rising. Scan about 3 to 5 candles left and right on this chart. Do you see stretches where candles climb, but volume bars shrink? That's the losing steam signal. Bottom line: price and volume agree equals trend confirmation / they disagree equals watch for a turn. Use this to check how healthy the current trend really is. Chart Basics Lesson 3 Recap. 1. Volume is the total amount traded in that period, the size of investor interest, and a measure of trust. 2. Always read price and volume as a set. Volume alone is not a signal. It acts as evidence that confirms a price move. 3. On every boundary break, check volume. A breakout without volume is often a fakeout. In the next lesson, Lesson 4, we'll cover trends and ranges. How to read which way price is flowing right now. This lesson is for education only and is not investment advice. You alone are responsible for every trade you make.